Hey guys, welcome to part 3. Today now we're going to go through Thinkorswim navigation. Alright, so without further ado, let's head on over to our Thinkorswim platform. So here we are at the Thinkorswim platform. Let me just move this so I don't cover up anything. Okay, so now we're at the Thinkorswim platform. The first thing I'd like you to do is to adjust your options contract first. Alright, this is very important and you should always practice it. So first and foremost, go to setup. Then go to application setting over here. After which, go on to order defaults. Alright, order default here, and then move over to this stock here. You see, change it to 100 each. Alright, I think also by default will put it very high because they want to earn your money. They want you to buy more shares and everything, right? So change it down lower. If your account is less than $5,000, change it to just 1. Alright, 1. Same thing for options. By default will be 10. Change it down to 1. Okay, you do not want to be buying or selling 10 contracts out of nowhere, and then that would definitely hurt your portfolio if something big actually happens, and the whole portfolio will just be wiped out, and you potentially need to sell your house and whatsoever to pay back all this money. So you wouldn't want that to happen. Set it to 1, default quantity 1, order quantity also 1. Alright. So apply setting, then once you're done, you're okay. Next, you probably see a screen something like this. Alright, very cramped up. You want to expand your space a little out, right? So all you have to do is just simply press this button over here, change right expansion setting. Now when you press that, you come out of this screen here. First and foremost, I'd like you to change down here to 100. Alright, when you press apply, okay. So when you press apply, let me just zoom out. You can see that there's a huge space over here. It makes your whole workspace neater. You can actually look at it to predict when will the stock price move, everything. You can do your own charting. You can draw lines and every single thing over here to help you out better. Okay. So the next thing I want you to do is actually to change your time frame from 3. Your initial one will be 1 year, right? Your initial one will be 1 year. It will look something like this. Alright, look very thin, also very small. So what I like you to do is to actually change it over to 3 years also. So when you apply setting, it will look something like this. You can see 3 years of data. You can then zoom in yourself and arrange yourself later. Okay, so these are actually some tips that you should use to practice to actually make sure that your account looks neat, looks good for you to actually really carry out trades properly. Okay, now next we like you to go to this thing. I now like you to bring you back in time. Okay, bring you back in time, and then you can do all your things. You can go back to 1 year ago, adjust all your mistakes and wrongdoings and every single thing there. Alright, will you like that? If you like that, then follow me here. But you can simply just press on this button called the on-demand button. What happens on the on-demand button basically means it will bring you to a simulated trading. It's not paper trading. By the way, this all can only be done if you are using a Thinkorswim live account. Using a paper account, you don't have all these functions, alright? So anyway, it brings you a simulated trading. It's not paper trading. Simulated trading means that Thinkorswim may actually consolidate and copy all the data from every single second of the market from a few years. Alright, so you can actually go backtrack in time to actually determine, when's a good time to sell options. You will back test your option strategy, sell options, practice rolling, practice closing, practice day trading, and whatsoever. Alright. So let's just say we have to go back in time to maybe 1 year ago before the whole market correction even happened. So let's just go to maybe 2018 January. We know that 2018 February there's a correction in the market, right? So we're going to go back to 2018 January when the correction haven't happened. We can go back to maybe 15th of January. Let's go. So we go back for the S&P 500, let it buffer a bit on demand, then you let it load the chart a little bit here and there. You can see that the market has still been going all along. It has never actually crashed down yet. So now we're back 1 year ago in time. So let's just say, for example, you like to do a trade. Let me just see. Let me just closing order for this first. Okay, whatever. This one I can't really do anything about it. So let's do SPX lah. Okay, let's do SPX so we don't confuse ourselves. So the SPX is the same as the S&P 500 basically lah. Okay. So we'll just wait for the SPX to load up for the options chain. It's gonna take a while and all, so we're just gonna hold on and wait. Okay, so now the option chain has come out. Right now the market is still going very high up. We predict that the market is still going to go up because of huge upwards momentum, right? Keep going up. And just take in mind that you do not know that the correction is coming. You just pretend you don't know anything about it. You just continue to sell puts. So what happens is you sell a put over here. You go to a trade tab. we ideally like to sell puts up 30 days to 45 days in advance. So this is the optimal place because analysts and researchers have found that the theta decay, the time decay the fastest at this point. So selling 35 days to 45 days out is the best, the most optimal time to sell options contract. So let's just say you want to go for a 40 days out on Think or Swim platform over here. You can simply scroll all the way down. I know it's still taking a lot of time to load. It's still taking a lot of time to load. Okay, maybe why not? I can't adjust this. Can I adjust this? No. Okay, why not? Let's just take a look at Apple lah. Simple. Apple. Because S&P 500, the SPX have too many option chains. It will take too long time to load. So as for example, yeah, back in time, on Apple, this is, let me change the hour to a trading hour. 22:35. Go. So you can see right now I've changed the timing to a market open hour. You can see that we're now currently on Apple. 15 Jan 2018, okay. So the market is running, everything is good. Not too sure. Oh wait, sorry, 15 Jan is a public holiday. That's why the market is not open. So we change to 16 Jan, okay. Currently at 16 Jan to 10:30 p.m. US, 10:30 p.m. Singapore time. Okay, so what we do is we can actually look. You can see the market's open right now. You can see that it's up down movement of the market. So let's just say we want to trade Apple for today. So all we can do is simply, okay, we still have to wait. Okay, so you can see the strike price, everything, the options, how much you're going to collect, everything. So let's just say, for example, okay, for example, you want to trade Apple at 170. So all you have to do is simply sell a put here. Just left click, sell Apple 170 at 265. Okay, you can bargain a little higher because, we can, because, you're doing options, you can bargain. This is like going to the supermarket, buy a chicken, buy a fish, you can bargain for it. So let's just say you like Apple, you sell a put at 268. Okay, so you sold a put there, and then it's waiting to get filled. So let's just, for this exercise, let's just quickly get filled at 250. Okay, maybe let me change to market price. Confirm send market price. So I saw a put market price already. I'm into the money. I'm really having a put position here. So now we can see that the moment we go into put, we lose 50 cents. But that's okay. Ignore this S&P 500. Just focus on this Apple. It's okay because sometimes we lose out 50 cents. There's no way we can do. Sometimes we might lose out $1 or $2. There's no way we can edit it because it's really up to Think or Swim platform, and the smart monies are moving faster based on the algorithms. So now we have Apple. So let's just say if we move fast forward in time by maybe 2 weeks in time. Okay, so meaning to say 2 weeks has passed, you're still holding the Apple position, you have not closed, you have not touched your Apple position yet, everything is still good. Let's take a look at how Apple performed relative and how much money can you actually get from this trade. So we fast forward in time, you see pre-buffering, it's loading, it's, so, okay, wait, has the market dropped already? Okay, I'm so sorry, man, the market has dropped, so let's move back one week in advance first, okay? Let's move back 1 week in advance first. So, pre-buffering. Okay, so now we have seen that Apple since then has not actually went up much, it's still relatively at its place. So technically on today you actually still lose $22.50. You did not make much money, you did not lose much money. You can choose to close the option contract right now and lose $2.50. You can also wait, hold, and see how it goes like the rest of the month. Now we take a look at it, we open it up, we can see there's still 31 days left, it's still relatively safe, we want to keep this position. So what we do is maybe we just continue to hold it on and wait it out to maybe reaching the end of 31 days. So let's just say we move it all over to like 6th of February. Okay, this is like probably 3 weeks later. And let's see how your option position is like right now. So when we move it all the way to 6th of February, this point in time, we really know that the market corrected, the market crashed, right? Kind of have a mini crash, right? So what happened to your position? How much money are you losing? What can you do to your position? These are the things that we want to find out, and we want to actually continue to do what we can do in the market. So you found out that Apple, because you traded at the trade price is $2.49, you collected $249 premiums, but somehow or rather you just oh my god, you crashed. You lost $1,000 because why? Because the market crashed all the way down here. This is just terrible, right? This is just horrible. So what you can do right now, you have two options. First option, you can actually right click, create closing order, and buy back one Apple position. Now this means that you're closing off your contract. You take the loss of $1,000 if you believe that Apple will never ever go back up again. Alright, this is how you close a contract. Once you press confirm and send, it will tell you how much you're losing. So this one minus $249 which you previously collected will be how much you lost. Okay. Now the second option is that you do not want to close it right now. What you want to do is you want to roll your options, right? So what does roll mean? Roll means basically you give yourself a little bit more in time. So initially you had 45 days, now it's down to 17 days. You want to increase this time again to maybe another 45 more days. So what you essentially do is you close this option contract, okay, and you sell another one out in the future. By doing so, let me show how you roll first. So you roll simply is create rolling order. Okay, you right click create rolling order. Sell one calendar. So what happens is that you close away, you buy back your current position at 23rd February, which is supposed to expire, and you sell out one at March 2018. Alright, and because you roll, right, the market actually reward you with $67, right? This is because of you have new time decay in your favor. Okay, so you get another $67. So what happens is that you can, okay, it becomes $17, maybe because of market fluctuation, premium fluctuation. So you actually collect another $17. So your $249 potential profits become $260 over because you plus another $17 here. So you can simply confirm and send and roll. What happens is that you can actually go out, better is go out 1 month in time. So perhaps you can go to 23rd February or 23rd April. 23rd April is also okay. This 2 months out, so February, the 23rd, so you collect $142 more for holding a stock longer in time. So let's just say if you want to roll, you just simply press confirm and send, and you roll the contract straight away. You roll it all the way out. Then you'll see that all these things you'll see a bit weird and a bit fluctuated, but it's okay. Just wait it out. So let's go further in time to 23rd March. All right, let's go further in time to 23rd March. Let's go. So we let pre-buffer a bit, we go 23rd March. So we can see that the market did actually went even higher than our strike price. So actually, if you actually went over here, which is 12th of March, technically you can close off your contract easily. But imagine if you're still holding on to it, you would actually, now here trade price, market price, you will actually still lose maybe like $50 to $100 because you collected 1.4k worth of premium in this contract here, and now it's left $100 over. So technically you still will lose like $50 to $100 here. But eventually we know the Apple did rally all the way to $200 over. So what happened is that the moment you rally above this current price, this strike price over here, you really make money. You can actually close off your contract without losing money. You're supposed to lose $1,000 if you close your contract here right now. But because you roll it out in time, the market reward you with more premiums, and on top of it, you manage to close the trade without losing a single cent and make profit. Now this is the power of rolling, and instead of getting excised, you hold the stock, you can actually make it more flexible, and you can make money in the market. This is a very, very powerful technique that a lot of investors fail to exercise and fail to do. Okay, so this is rolling strategy. Now it does not work if you're rolling a call strategy. The most you can do is to roll for 2 months. Why? Because the stock can keep going higher and higher every single day. But when you roll a put, you know that the max loss of maybe Apple at this price is $183 per share. So that's the max loss. But you don't know how you won't know how much Apple will go in the long run. Maybe it can go to $1,000, and your sell call will keep losing money. So if you're doing a sell call, your max roll duration can only be 2 months. Okay. So I hope you actually learned something from this think or swim on demand function, how you can actually do trades, roll trades, and help yourself make a better position moving forward in the future. Okay, this is Yong Yik. Let's head on to section number 4. All right.